Hi, Bruce here from Voodoo Trading. Welcome to our YouTube series where we walk you through how we trade our systematic rules-based trading strategy. We're not suggesting that you should purchase the securities that we highlight here, but rather see the steps and the thought process that we go through in order to remove emotions from the trading process and systematically implement our trading rules. It is our belief that each trader should develop their own trading strategy that fits their personality and with rules they understand and can systematically execute. Okay, let's get started and review the new entry signal our trading strategy generated over the last couple days. And at the end of the video, we'll review the performance of our active trades. So stay tuned to the end and you can see where we are as far as performance goes for this year. Crude oil is one of the over 50 markets that we follow and review daily. We added oil to our watch list because it exhibited characteristics of a trending market with a number of higher highs and higher lows. This chart shows a 2-year trading period with an uptrend throughout. Our trading strategy has produced an entry signal 3 times during this trend. These entry signals are represented by the green arrows on the chart. The first entry signal came after the price crossed the 200-day moving average in late 2020. The second one came in the fall of 2021, and the other at the beginning of 2022. Another interesting fact about this trend is that if you listen to the media, the war in the Ukraine is primarily to blame for the surge in oil prices. The start of the war is represented by the orange line on the chart. You can see that the upward trend in oil was clearly in place way before the war started. Our previous entry signals were before the war started. The war has increased volume and volatility as highlighted by the orange circles. This could amplify the trend in the coming months. We're trading the HUC ETF in Canada, but a similar trend exists on both the USO and BNO oil ETFs in the US. Okay, now we have zoomed into a 6-month trading period. Our trading rule number 2 identifies potential trade setups for the securities on our watch list. The crude oil ETF became a potential trade setup when it broke out and closed above the previous high of 23.59. The breakout level is illustrated by the dashed green line on the chart. Our trading rule number 3 states that we will enter the trade if there's a follow-through on the breakout. We placed a buy stop order above the breakout close of 23.72, and the order was filled, getting us into the trade. Our entry level is indicated by the pink line on the chart. Our trading rule number 4 states that we must know when we'll get out if we're wrong and the upward trend does not continue. As with most successful traders, we are wrong more than we are right. We placed our stop loss at 21.95, which is shown by the pink line on the chart. We calculated our stop loss using the average true range, which measures the average volatility of the ETF over the past 20 days. You can see from the graph at the bottom of the stock chart that the ATR was 59 cents when we initiated the trade. In order to give the trade some breathing room, we use a 3 times ATR, which in this case is $1.77. We calculated our $21.95 stop loss price by subtracting the 3 times ATR from our purchase price. As soon as our entry order is filled, we place our stop loss order with our broker so that the trade will automatically close if the stop loss price is hit. Once we know our entry price and stop loss price, we can calculate how many shares of the ETF we should purchase. In this case, we are willing to risk 0.75% or $750 of our theoretical $100,000 portfolio if we are wrong. By dividing our bet amount of $750 by the difference between the purchase price and the stop loss price, we determine that we can buy approximately 425 shares of the security. Defining the bet size of every trade is the key to long-term trading success. If you'd like to see how this trade turns out, please subscribe to our channel below and click the bell, and you will be notified when the next video is released. If you think this information is useful, please hit the thumbs up button below and share the video with your friends. Okay, let's look at our active trades. As you can see in this table, we currently have 7 active trades. All our active trades are commodity related and primarily in the energy and agricultural space. The commodity space has been consolidating over the past 3 months, but many of these markets appear ready to break out and resume the upward trends. We are currently about 90% invested. Our trading strategy currently has a 38% success rate, which is right on target. As of the end of April, our trading strategy has a 15% year-to-date return. Please let us know if you have any questions or comments on today's video. Thanks for watching, and we'll talk soon. Cheers.